Hello, my name is Sylvia and we are going to do the Getting Started tutorial. This will take you from beginning to end with an analysis without so many details. More of the details we'll do in separate tutorials. When we start the program, we'll get this screen. We'll open a portfolio, for example, the S&P 100. The 100 securities and their price data for these dates are loaded. Then immediately, for example, we'll calculate the efficient frontier. This frontier shows us 100 optimal portfolios at different price levels, and the curve is actually the supremum of all possible portfolios with these 100 securities. Each point here represent the risk and reward for each one of these securities that participated in making the efficient frontier, meaning for all other securities the weight is 0. They do not participate in the efficient frontier. This is the asset allocation screen, and suppose we choose the tangency portfolio. It is the portfolio for which we get the maximum reward for each unit of risk. We continue to the capital asset pricing model analysis. This analysis compares the performance of our portfolio to the performance of the market, or the sensitivity of our optimal portfolio to the behavior of the market. In this case, we have a beta of 87% with an R-square of 83%, meaning this beta is quite valid. The R-square is close to 100. And what it means is that we have a high positive correlation to the behavior of the market. Here we see the securities that participated in the optimal portfolio, and they are all undervalued. The line here, where it shows the beta for the S&P 500 is 1, represents separates the plane between the overvalue and undervalue securities, and these securities are undervalued and we actually want to buy them because they're undervalued. More on this in a later tutorial. Let's look at the backtesting. The backtesting shows us the price performance of our diversified optimal portfolio during this period of time, and the price performance of the market during this period of time. Here we see the price rate performance of the optimal portfolio in comparison to the price rate performance of the market. Suppose we continue to generate a report. So this is the results of the tangency portfolio, and suppose we have $100,000 to invest, and you see that it gives us the optimal portfolio, and then this is the price on this date on the 1st of March, and the number of shares to buy of each. This is the value in money that needs to be spent. This is the weight in percent, and this is the security name. The total money that we would invest here is $99,233. That's without fees. we may export the portfolio. Say this is actually a way to export a portfolio in a format that we can import later on. We will show this later. Right now, let's create a report, for example. And this is in a format, either a PDF format, Excel format. Notice it tells us the asset allocation in weight and value here. And here actually it is also with how many shares to buy of each security. And you get an asset allocation graph. Suppose we want to save it. We can export the document either as a PDF file, or suppose you want to save it as an XLS file. Let's say OK. We'll save it. We'll open it. This is our portfolio. And we are done. Thank you.